Debbie Marcoux is licensed by the California Department of Business Oversight under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona, 094-1504, Georgia 69178, Illinois 031.005-8339, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington, MLO 237926, Heidi Slade Points, California, DBO 1666881.
She's the mortgage mom. She can get things done. When you're in need and don't know where to go, pick up the phone and call mom.
Are we live?
You are live.
All right.
Hi.
All right. So we want to make sure everybody can hear us today. We've had some sound issues over the last 2 months. I feel ever since we went into social distancing mode, we have had some issues. Anybody that is out there that is listening, can you guys please let us know that you can hear us? That would be fantastic. I know Manny's trying to load up the sound right now from his separate phone. But anybody out there listening, Heidi, please talk.
Hello.
Okay, let us know that you guys can hear me and Heidi both. We would love to hear that. We'd love to know. Manny, can you get sound where you're at? Yeah? Okay. All right, so we're good? Yeah, I think so. I think we did it.
Yeah, I think last week they could hear me like on Facebook, but not on YouTube, or on YouTube, but not Facebook. I don't know.
Yeah, I don't know, but here we go. So welcome to Mortgage Mom Radio. I am Debbie Marcoux, and as always, I've got Heidi Slagle Points with me.
Hello.
And we are coming to you live from my office and her house. We are social distancing at its best, ready to get this over with and back to reality, that is for sure.
Yeah.
But what do we do here at Mortgage Mom Radio? We bring you guys all kinds of education and advice all around mortgage lending and real estate. And that is the key goal here. We want to make sure that everybody becomes a homeowner. If you own a home, that you're in the best financing position that you can be in for your family, as far as a cash flow situation. You know, your monthly debts are under control. Maybe we need to do some cash out, pay some of those credit cards off. But we're here to try to help you. We want to bring you information as we get it. Things are constantly changing in the lending world. The guidelines are changing, credit scores, loan types, down payment requirements, everything about lending changes. And especially right now in, the situation that we've been in with COVID and, the liquidity of the market, things are just constantly and rapidly changing. So that is what we do here at Mortgage Mom Radio. If you guys want to hear more, if you've watched us before, you want to, know when we come on live, it's always Wednesday at 5 on YouTube, right here on Facebook as well. And for anybody at all that'd like to be our first subscriber to Twitch, please go on there. Twitch is more of a gaming platform, but we just thought it was something that was kind of fun, so we thought we'd figure it out. But if you guys would like to follow us, please subscribe to the channel and click that little notification button at the top, and we'll go from there. So Matt's got his hand up already.
Yep, got a few confirmations that the sound is good. Erica says hello, and so does Houseboat Billy. And Fritzy's joining us on Facebook.
I love it. Well, hello, Fritzy. Now you can actually put a face to the voice. I am Debbie, and that is Heidi. And so happy to see you on Houseboat Billy. We love that you always follow us every Wednesday. That is fantastic. Anybody that has any questions whatsoever, please feel free to go ahead and put those into the feed. We'd love to hear from you. We'd love to answer those questions for you. That is what we are here for. But it is the beginning of the show, and we always do catching up with mom. So, Heidi, you're supposed to be moving in a week, and I see all of your furniture there in the background. How is that going?
It was funny. It felt like I had all the time in the world, and turns out it's really coming off with fast, and I got a lot of stuff to do. So I'm okay. I'm breathing. Not as well today as most days, but it's coming.
It's coming. It's coming along. And you know what? It is the beginning of summer. I am so ready for it. It's been a long year already, and it's just the end of May. I don't know if anybody else feels that way, but
right. I feel like this year has been longer than the last 3 years put together.
Yes.
And it's just the end of May, and I'm almost scared for the rest of the year because I'm wondering, like, is it just going to drag out, or is all of a sudden it's going to be Christmas?
Right.
I can't figure out which direction it's going to go. But no, the movie's going to be okay. I have packers coming next week. I have movers coming next week. And I'm going to be optimistic that it's just going to go absolutely.
Oh, you keep that optimism going. Moves do not usually go perfect, but you know, it's a good goal to have. If we don't have goals, we just don't get there. So it's a great goal to have.
I figured 2020, you just got to keep the faith, because at this point, it's the only thing I got going.
Oh,
Okay,
no.
got to get better. But no, it's going to be good. And this movie actually won't be too bad. Almost everything's going in storage till we hire a new house. So
Right, which you still haven't figured out where you're going.
No.
No. For all of you guys watching us on radio on Saturday, you couldn't see the response because you're not watching us live while we're recording it. But yes, her face was a definite no. She doesn't know what she's doing yet. But you know what? You're a brave soul. You got to love it. You know, I wish that I could take those kinds of chances, but I'm just not that person.
yeah, we're just not positive yet. You know, we're either going all the way across the country, or we're just going hop, skipping, and jump next door. So, you know, one or the other.
It's okay. Yeah.
Yeah. You know, eventually we will land in a home.
Yes.
In a,
Yes, you will. Yes, you will.
so,
Well,
Good.
I am looking forward. I have not had any time off. Last year in July is when we went on our houseboat trip to Powell. And that was actually only 4 days that we were on that houseboat. And it was so nice because everything was completely disconnected. The phone was off. It didn't work at all. There was no reception. There was no computer to be had. It was very, very restful. But it's the last time we've been out of town. And I am looking forward to a vacation. So I am actually taking off June the 4th. And I am going to go to Parker, rented a house, and going to have some fun. So I've got Matt with his hand up again at me.
Since you're doing catching up with mom, Chief Manny says in all caps, boat, boat, boat.
I know.
And Erica, please don't encourage him.
Yeah, so we're going to Parker. I rented a house. You know, my mom, we talk more about, I feel like we talk more about Heidi than we do about me. But, you know, my mom's actually got a pretty serious autoimmune disease, and it actually affects her lungs. So with, you know, COVID, we've been extremely, extremely careful. The poor thing has been, you know, locked up. She's not married, so she's all by herself. It's been months that she hasn't been able to get out. And, you know, she does the same thing that we do. I mean, she does loans as well. That's how I learned to do what I do. She's an absolute amazing rock star in her field. And I just want to get her out. So rented a house that is literally right on the water. And we are going to take her from car to house to dock to boat, from dock to boat to house to car. And that way she doesn't have to come into contact with anybody, but we can get her out and keep the social distancing moving. I know a lot of people are really excited with retail starting to reopen, with restaurants starting to reopen. I know everybody is very excited about that, but we all still have to remember that it's not gone. It's still there. It's, you know, still going to spread. And for those people that are very sensitive to, you know, catching something like that, we've got to be really careful. So I'm looking forward to it. I need the downtime. I'm ready. It's been a long time since I've had any. I'm looking forward to being able to spend some time with my mom. We're still social distancing, me and Heidi, because, you know, I don't want Heidi coming to the office every day, and she might happen to have something that I could possibly give to my mom. So we're going to wait until after I get back before we start doing these things again in studio together, which I'm looking forward to as well.
yes.
But-
no, and I'm so glad that you guys are getting out of town and your mom gets to get out of town, see some family, leave her place, because it's, you know, we don't really talk about it a lot. Like, social distancing is hard, but for those that at least are at home with family, you have people to do that with. Those that are social distancing alone, it's just that much harder. You're by yourself. So I'm really excited that you guys are going. I'm not excited that you're leaving me, but
I have a feeling that you have it totally under control. But I obviously, so that was kind of part of, you know, renting the house, is that I've got my internet and I've got my computer. And so I'm not going to be completely shut down like I was. I mean, again, a houseboat trip where you have nothing, you have no way to communicate at all. truly 4 days was the most that I could have done that, because there's just too much going on. There's too many friends, or not friends, but too many clients, too many loans, too many things that are happening to be just completely cut off. So I will have my computer, and I'll be able to keep up and make sure that things are running smoothly and things are getting done. But I'm definitely ready to get out of the house and go somewhere and do something, and truly spend some time with my mom. So I'm looking forward to that. That's going to be, at the end of next week. And, we're going to do that for a week. But, that's my catching up with mom, is, everybody out there. Just remember, guys, it's not over. And, everybody's got their opinion. I'm not here to tell you that it's okay, go mask free. I'm not here to tell you it's not okay to go mask free. That's not at all what I'm trying to say. But just remember, it's still out there. So keep, it doesn't mean it's over because everything is, starting to reopen. Just continue to be safe and healthy, and, wear your mask when you're in public, and wash your hands a lot, and, do the best that you can to build your immune system. And, just remember that there's a lot of people that you might come into contact with that, truly are, very subject to something that could be pretty bad if they do catch it. So that's my piece for the day.
And remember, it's going to be like Black Friday everywhere. So really think twice. Do you really want to jump out when everyone else is so excited that stores are reopening and some restaurants? I mean, I personally don't go out shopping on Black Friday for that reason. So I'm just kind of imagining in my head what the first weekend of retail is going to look like.
Yeah, and I'm kind of confused because we've got restaurants that are reopening, and we have retail that is reopening, and we have hair salons that are reopening.
No, hair salons are not.
I actually saw something that said it was, but that nail salons were not. And I'm like, how is a hair salon any different than a nail salon? And exactly where does that put my European Wax Center? Where do they fall? Can I go get waxed? Can I not? It's I'm wondering what part of the spectrum that they're on.
Look, I was confused. I said restaurants can, churches can, which are, big social centers, retail can, but hair, nail, I'm confused.
Yeah, I know. We'll figure it out. I'm sure just like our loan guidelines continue to change, I'm sure that those guidelines are going to keep going too. So, we'll just kind of keep following them. So, all right, well, enough about us, and catching up with mom time. That was fun. But so what is going on in the mortgage industry today? Because things are definitely changing, and they're changing every day, like we said. So we got on here about 6 weeks ago, and we said, if you go into forbearance, it's going to be 12 months before, you can actually get another loan. You're going to have to make 12 months payments on time. There was really no guidance yet from Fannie Mae or Freddie Mac. They weren't telling us what we can or can't do. So, all of the different mortgage companies were just kind of implementing their own guideline, assuming something was going to come, but nothing had yet. So we now finally have guidance from Fannie Mae, Freddie Mac. I don't believe that FHA has given us that guidance yet. Can you confirm that, Heidi? Do you know?
No, Fannie, Freddie, FHA, VA.
Okay, so all four have given us guidance. Yeah. So they're telling us now that you can, if you've been in forbearance, you can get a mortgage, but you do have to be out of your forbearance, and you have to have made at least 3 monthly payments on time. So post forbearance, 3 months later, after payments have all been made on time, you are now then going to be eligible for financing. So that was a huge win. Big win this week. Definitely.
Yeah. Huge win, because 3 months is a big difference than having to wait a year after getting your forbearance closed.
Right.
Yeah.
Right. Absolutely. So, do I think that if you can make a payment, you should continue to do that? Yes. I'm not coming away from that stance at all. I want you guys all to understand that forbearance does go on your credit report. It is notated on the bottom of the account. So when that is notated on that account, that can affect the credit score. How fast that forbearance will come off of that credit report we don't know. We've got to watch and see what happens moving forward. That could be something that you may have a very difficult time arguing, having to get letters, disputing to try to get that forbearance removed once you are not, no longer in forbearance. So with that, kind of the unknowns of what's going to happen, I would definitely suggest that if you can continue to make your mortgage payment, that you do. Do not go into forbearance if you do not need to, because at the end of the day, it's just another leap or another hurdle in the process that we all need to get through before we can put you into some really great financing. So definitely something, please keep that in mind. It was a big win, though. I mean, 3 months is superior to 12.
And I do believe with FHA and VA, they are still going to continue to look at more of the overall credit that continue to go on with that forbearance. So keep that in mind, is just because you remove that and they have that 3 months, they are going to take a deeper dive into the additional credit history that went on with that forbearance.
Right, absolutely. So here's my question, since we are live and everybody is watching us, do you have your Outlook open? Or is it Matt that has his Outlook open? Because somebody's going, ding, ding, ding.
Not me this time.
It's mine.
I love it. I love it. Hey, you know what?
At what point can I close that without anyone noticing that I'm like
That you're closing it. It was kind of like
at my computer?
Yeah, it was like when we had Larry on and his phone kept ringing. You know, it's part of the live piece. It's what we do. We are live right here Wednesdays at 5 on YouTube, Twitch, and Facebook. We want you guys to catch it. We do record it live. Exactly what you see live on Wednesday is what goes on the radio on Saturday morning. If you guys enjoy the show, you want to know more, you want to ask questions, you got to, watch us while we're doing it live so that you can get those questions to us and we can answer those during the show. But so you guys remember, it's Mortgage Mom Radio everywhere. You can follow us on whatever social media that you like to watch, whether that be YouTube or Facebook. We've got our podcast if you like to just hear it, listen. However you like to learn is how we want you, to follow us. So we're bringing all of those different pieces to you in that manner. Again, if you guys are watching and you have a question, please feel free to put that question right into the feed. We'd be happy to read that out loud and answer that question. So what else do we have going on in mortgage lending today? I've touched on it quite a few times, multiple times, but I want to touch on it again because it just keeps coming up over and over and over, are the rate quotes that are happening right now, the bait and switches that are happening right now in the market. There was one in particular that just happened this week that was absolutely amazing, like floor dropping, drop the mic and walk out. We had somebody that got a fantastic rate quote because obviously you've all seen it on the internet. You've all heard it on the radio. Call now, get 2.5%. Call now, get 2.75% on your interest rate. And, when you call, you get really super excited. Who doesn't want that deal? You get your loan estimate in, by email and you're looking it over. And somebody sent it to me and said, can you look at this? It just doesn't look right. And there were 4.875, that is almost 5 points being charged on that loan. So I want to talk a little bit about points because I think that we talk about this a lot, but people don't really understand what are points, how is that different than closing costs, and it's not something that if you're not in the business that you don't really understand, right? So I think that we should really talk about that because it doesn't matter what interest rate that you're getting if it's going to cost you $1 gazillion to get that interest rate. So Heidi, let's talk a little bit about points.
Okay.
All right.
I'm still trying to breathe over what you just said about the points that someone's going to charge for 2.5%.
Yes. 4.875 points is what was being charged on this estimate. So, what you guys have to keep in mind is there's closing costs that there is nothing that we can do about. They're part of the loan. They have to be paid. Your county recording fees, your notary fees to sign your documents, the escrow cost, the title insurance cost, the cost to originate your loan. Those are all things that there is nothing that we can do about. Those closing costs on a refinance, not a purchase, refinance, everything all combined together should be between $3,600 and $4,200 in that ballpark, depending on whether you need an appraisal or whether you don't. Go back.
Sorry.
No. Hey, I just want you to jump in and just don't even put your hand in the air. Just go.
Okay. Well, first of all, Dad says hi.
All right. Hi, Dad.
But second, Patty over on Facebook is asking, are they still asking for reserves for a 2-unit to refinance with cash out FHA?
Yes. So when you have units, Patty, you have to have 6 months of reserves for an FHA cash out refinance. You actually have to have 6 months reserves even for a purchase on a 2-unit. It's just because it's the 2-unit, you're going to have a renter on the other side in that other unit. So they're looking for the cash reserves for the financing. See, these are the awesome questions that we want people asking us. Keep throwing them in there. Keep charging them. We love it. And if you guys aren't watching us live, you're listening on Saturday morning, start watching us live. Go to YouTube, subscribe to the channel, turn on your notifications, follow our page on Facebook. Wherever you guys want to watch us, please do that so that you can throw your questions into the feed and we can get those answered for you.
And Aunt Pam says hi as well.
Hi, Aunt Pam. Love you too. I love that my family watches. It makes me feel so special.
Yes.
All right. So back to points. So, the total cost for a refinance for all of the things that there is no control over, credit reports, flood certs, tax service fees, everything that just goes into it, $3,600 to about $4,200. The difference being that we don't know whether or not we need to get you an appraisal. If we need an appraisal, that appraisal is going to be somewhere between $500 and $650, depending on, the property value, the size of the lot. Do you have horse property? Do you have acreage? Those kinds of things will determine what that appraiser is going to charge to do that refinance. Investment properties are going to be a little bit more expensive because they have to do more work. The appraiser's has to actually pull what they call as a rent schedule. They've got to figure out how much rent is coming in, what are those properties valued at at a rental market as far as a monthly rent basis. They have to figure out what those carrying costs are on that house and show us what a net is for the actual profitability of that rental. So rentals are going to be a little bit more expensive, but on average, primary residence, second home, you're about $3,600 to $4,200 in flat refinance fees. Now, you also have points, and points are in addition to those closing costs. We always try to do our very best to get somebody into a loan at 0 points. Sometimes that's not available on a rate sheet. Sometimes the best rate comes with a 1 point cost. Sometimes the best rate comes with a 0.5 point cost or a 0.25% cost. It depends on the rate sheet that day, the scenario, your credit score. Is there a 0 point loan? Is there not? If you are paying more than 1 point for your rate, you have got to stop and think, is this worth it? If your loan amount is $500,000, 1 point is 1% of that loan amount. $5,000. So that is $5,000 on top of your typical costs. So now think about almost 5 points.
And for me, I can't see any reason why 5 points would be a benefit.
It's not. It's simple math. It's something that you have to do.
Right.
How much is the lower interest rate going to save you in your monthly payment? And how much did that interest rate cost you to get? And where is your actual break even? So your savings versus cost, where is your break even? You just divide it, right?
How long does it take you to recoup that money and then to start saving?
It's
5 points.
5 points. I mean, it was astronomical, right? Now, there's going to be times where you've got a lower credit score, where the rate sheet is just really going to be ugly. It's something that we're going to discuss with you. We're going to talk about. We've had to charge clients 2 points before. It happens. If you're in that lower credit score range, unfortunately, those interest rates get higher. The 0 point options go away. If you really want a loan, it's something that you have to pay for. But when you've got great credit, a lot of equity in your home, to pay that kind of money just to get excited over an interest rate that is being quoted just doesn't make sense. So please stop. That is what we do here. We will look at that. We will send you on your way if it is a deal we can't beat, or if it's a deal that's just untouchable. We're going to tell you, hey, this is fantastic. Go get it. But we're going to also tell you if it just doesn't make sense.
Patty said thank you and then said we have a 3.25, but the PMI we want off.
So that is something to definitely talk to us about. And if she has a PMI, it sounds like she's probably got an FHA loan right now. When you're in a 2-unit property, it's very difficult to get in. I don't know of personally any loan programs that will let you do less than 20% down payment on a 2-unit. On a 3 to 4 unit, you usually need a little bit more than that. The only loan program that will allow less than 20% down is FHA, which is why she'd have mortgage insurance. So, Patty, we've got to go through the numbers and we have to see where would that interest rate be today in a conventional loan. Do you have enough equity to refinance it? So on a duplex, to do a refinance, you do have to have at least 25% of equity. Some programs we can push to 20 without the mortgage insurance. So we have to look to see, is there enough equity now to do that refinance? Where would that interest rate be on a conventional loan? And then what is that total monthly payment? Sometimes it's cheaper to keep the loan you have at the 3.25 with the mortgage insurance. And sometimes it's not. Sometimes it's absolutely a benefit to do that refinance and drop that mortgage insurance. But the only way for you to know what can we do and does it make sense is to call us. I'm going to take you through it, and we're going to go one number at a time, and we're going to determine whether it makes sense. And if it doesn't make sense, we're going to tell you, stick with what you've got, just wait a little bit. Contact me again in 6 months, a year. Let's see where you're at. Let's see where property values are. Let's see where interest rates are. Does it make sense now? So it just truly depends. And we want to make sure we're not putting you into something that doesn't. And we want to make sure we're putting you into the loan program that suits you the best. So, Patty, just call us. How does everybody call us? It's easy. It's 844-935-3634. That's 844-WE-LEND-FOR-YOU. That is LEND and the number 4. We can get you on the calendar and make sure that you've got an appointment to talk with me. We'll go through all of the numbers and determine whether or not it does or does not make sense. So on top of points, let's kind of talk a little bit about closing costs, because this is an education show, right? And Matt looks like he's got another question for me. I love it.
Got another.
Okay.
Patty just said yes, just not the reserves. And then Michael over on YouTube is asking if you have mortgage late payments in the last 12 months, does that automatically throw you out?
So it depends. It truly depends on whether or not you're trying to trying to pull cash out or not. On an FHA loan, if you have mortgage lates in the last 12 months, you absolutely cannot pull out cash at all. If you have one mortgage late in the last 12 months, I have seen a rate and term get approved. On Fannie Mae, it is truly up to the computer system. So whether or not we get an approval determines whether or not we can do it with the mortgage lates. We don't typically tend to see a DU or an LP, which is Fannie Mae or Freddie Mac approval, when there has been a late payment in the last 12 months, but it's not an actual written guideline. Did I hit that one right?
Yes, you did. That's exactly right.
Okay, just making sure I was on target. So it truly depends. If you had a late payment in the last 12 months, call us, talk to us about it. Let's see what we can do to help you. And, maybe it is something that we can do a rate and term refinance and still help you get your payment down. If you were trying to get cash out, keep making those payments and make sure you get to that 12th month that you've made that payment, and then you're golden and you're ready to go. Are we good? Do we have any other questions right now, Matt? Nope. All right, perfect. So let's keep going with closing costs. And Heidi, you look like you had something for me, so I want to hear it.
Well, I think before you go back to closing costs, I think the PMI or MI is something that's really important to address. We get a lot of calls that people just absolutely want to get rid of their MI. And even if it's not the best financial decision, because sometimes their payment goes up, they don't get the best rate. They're not really in that right position to get rid of it. And they just have this stigma that is the worst thing they can have. And I kind of think it's important to talk about that. If it's not beneficial to get rid of it at that point, don't let someone convince you that, okay, well, we can because you just hit that 20%, but with your credit or where rates are at today, it's not benefiting. You're going to end up paying the same or more, because right now it is a tax write-off. You can utilize that. So when you start paying the closing costs and you're getting a worse rate or even the same rate, and there's just no financial benefit at the moment, be patient. Wait, make sure you're getting at the best point in time to get rid of that versus being so determined because it's MI to get rid of it, to put yourself in a worse position, or even the same position, but really it's cost you money.
No, and I agree with that. I mean, mortgage insurance for a long time was not tax deductible. They had taken that away for quite some time. And during that time, it didn't make sense for, as long as you could keep your payment exactly the same as what you were paying before, because remember that an FHA loan will typically carry a lower interest rate than a conforming or a conventional loan would. So a lot of times, if you could at least get the payment to be exactly the same, but refinance and get rid of the mortgage insurance, it made sense because now it was all interest and it could be tax deductible. But now they've changed the guidelines, as they always do, on your tax returns. And the mortgage insurance is once again tax deductible. So it's something that if it doesn't actually drop the monthly payment that you're going to be making on a monthly basis, it does not make sense to do the refinance. Keep what you've got and hold tight. remember, we were just talking about closing costs, which we'll get back to. But every single time you do a refinance, there are closing costs. So your mortgage balance is going to go up a bit. So now you're financing more to do this refinance. So we need to make sure that the amount that it's costing you to do that refinance, that you can break even in a very short period of time. I really like it when I see a break even that happens within about 24 months or less. I ran one today that was a 9-month break even. Makes absolute sense to do that refinance. 9 months. Every single month after 9 months, you're saving money. So, that makes sense. But we need to make sure that we take you through it. And sometimes just because you have the mortgage insurance, it doesn't make sense to do a refinance. And that's many times.
Yeah, I just had it come up more recently that it's just such a determination for that mortgage insurance that it's really hard to get out of that mindset. And right now, it's okay to stay strong, just hold to it, and wait it out till it really is a benefit.
Right. Yeah, we lost you for a minute there. I thought, oh, there she goes. We lost her.
Uh-oh.
Yeah, that's okay. That's what happens when we're going live. It's totally fine.
I just want to jump in here. Patty said, pretty kitty. I think your cat is going to have its own little fan base out there. But Fritzy also jumped in and asked, if you are locked in at 3.3 and rates drop even more, can we get the lower rate?
No, you can't. So that's a great question, actually, Fritzy. I love that. And a lot of people do ask me that question over and over again. So when you lock in a rate, you are locked in. And if interest rates do drop significantly, there is what we call a renegotiation, a rate renegotiation that we can look into. The interest rate to break the lock, there is a cost to that. So we need to make sure that the interest rate drops enough that we can actually cover the cost of breaking the lock and also still reduce the interest rate for you so that there's a benefit to breaking the lock. So it doesn't necessarily cost you money. We're going to absorb it. So the best way that I explain this when people ask the question is, if you're locked in at your 3.3 and interest rates were to drop to 2.75, we're going to be able to renegotiate that lock, drop that rate to probably 2.875, and there's not going to be a cost to you. So you took the benefit of being locked in at a really great rate with no concern or worry that interest rates are going to fluctuate and go up on you. So you had that benefit of that security of that rate lock, but you also have that benefit of being able to renegotiate to take that lower rate. Now, if you have 3.375 right now and interest rates drop to 3.25, there's not enough movement there to do a rate lock renegotiation. It's going to upset you either way. If we don't lock you in and interest rates go to 3.5, you're going to be fuming mad that we didn't lock you in and that we should have locked you in and we quoted you a rate and we didn't lock you. But if interest rates, you're at 3.375 and interest rates drop to 3.25 and we did lock you, you're going to be fuming mad that we locked you in and you didn't want to be locked in. It's a double-edged sword and it's very difficult. But at the end of the day, when you're in a purchase contract or a refinance where you're going to be closing within the next 30 days, the difference of that small rate adjustment is very small, and it is not worth the risk of waiting and floating and floating and floating and floating, and then all of a sudden we're almost ready to close and interest rates have gone up and now the payment is more than what you had originally signed up for. So it's definitely better to be on the conservative side, have that interest rate locked in. If you're comfortable with your payment, you understand what it is, you know that is going to be the payment that you're going to get into at the time that the loan closes. So there's no surprises, questions that come about. It truly is like, are you that gambler? When you go to Vegas and you roll the dice and you win, do you let it ride? Or do you take your money and do you walk? Are you that conservative person or are you that aggressive person? Totally your call, right? And it's your choice whether you want to do that or not do that. But it's a double-edged sword. It is very difficult, but if you're not locked in, you are floating with the market, and the market has been bouncing around like ping pong balls over the last 2 months. We have been up as much as 2.25 to 3/8 in rate. We could go from 3.3 to 3.75 in a day, and we could be back from 3.75 to 3.25 the next day. We've been bouncing like ping pong balls, and if you get an interest rate that's really good and you're happy with it and you like the numbers, that is definitely the interest rate to lock in. That was a great question, Fritzy, truly. And it's two questions. It's, you know, it's two answers. The answer is no, but the answer is yes, we can, but how? And so it does get a little bit confusing, and people don't understand how that works. So I love that question. So I don't remember what we were talking about. Oh, we were talking about closing costs. We were talking about points. We were talking about MI, mortgage insurance, whether you should or you shouldn't do that, you know, refinance to get rid of that mortgage insurance. And another thing I want to talk about with closing costs that I think is really important for people to understand are taxes, insurance, and mortgage interest, because a lot of people don't understand those things. They hear my closing costs are going to be $3,600. My closing costs are going to be $4,100, $4,200. They get their estimate, and all of a sudden they see $10,000, and they don't understand. Well, that's not what you quoted me, and they don't understand taxes and insurance and prepaid interest. So Heidi, I'm going to let you explain prepaid interest.
Oh, thanks.
Yeah, you're welcome. I'll take on a bunch of stuff. I'm just going to let you talk a little bit so you don't have to keep staring at me.
Well, you know, it's
Yeah.
fun.
Yeah.
Okay, so, and I get these questions a lot because I go over a lot of the closing estimates with people, and they're very confused and unsure, and they think that they're getting charged for it. So prepaid interest is everyone says, how many payments am I going to skip? Right?
It's always the question. Can I skip
Always the
two?
question.
Hey, I talked to
Right.
another lender and they told me I could skip two, so I don't want your loan anymore. How many times have we heard that?
Oh, over and over.
Right.
You're not skipping any payments. So let me just
You're just financing them. Yeah.
you're just financing them, which is fine, and sometimes that's very helpful. But your prepaid interest is going to be the interest from the day we close to the next month, because you're not the first of the next month, essentially, because you're not going to pay the interest there. So it's going to be put into your closing cost, your financing of the loan. Then the interest starts, because you're always 30 days interest delay.
Always behind.
Always behind 1 month of interest when you're making that mortgage payment. So if you're not going to pay on the first, you're going to get your following month. That's the interest. So you're only paying the amount from the day you close. So if you close on the 5th of the month, you're going to pay prepaid interest from the 6th of the month to the 30th or 31st, whatever that may be. Then the next month, that interest is accruing for your next payment. You're not paying it forward, you're paying it delayed. So the prepaid interest, when we quote you, it adjusts based on your closing date. I think that's the simplest way I can explain it.
Yeah. Yeah. So, so why do some mortgage lenders tell you when you're doing a refinance that you can skip two payments? So basically what they are saying is, we're going to close you sometime around the 15th of the month, and your payment is due on the 1st, but you have time where it won't show up on your credit report and you won't get hit with a late fee. So we have about 15, 16 days to get your loan paid off, so you don't make that payment that is due on the 1st. But when we get your payoff demand, those extra days of interest still have to be paid. So now what you owe on your loan is more than what it was when you started. So now when we pay off your mortgage, we're paying off a bigger dollar amount. So now you're going to either owe a little bit of money to close the loan, or you're not going to get as much cash back if you were trying to do a cash out refinance than what you originally thought you were going to get back. Then we've also got to charge you the prepaid interest from the 15th of the month through the end of the month, and then you're going to skip your mortgage payment. So with a brand new note, a brand new mortgage, if we close in June, your first payment is June, July, August 1st. Thank you. August 1st. If you close, if you didn't make your June 1st payment, then that in their mind is thinking, oh, well, I'm skipping June and July. Well, you're not, because your payoff demand is including all of your interest. And then when you get your new payoff demand someday, when you sell the house or you pay off that loan that we're doing for you, you're still going to be 30 days behind. So in reality, you're not skipping two payments. So I just want people to understand that. If that's the way that you want to do it, and you want to try to finance all of that interest in, and you want to try to be able to take a couple of months to breathe, we can absolutely work through that with you. But it's nothing special that somebody else is doing. They're just telling you don't make the payment, and they're they're banking on the fact that they can get you paid off before you've got either a late charge or a late 30-day late on your credit report. So I always actually tell people, make the payment. If you have a payment due, make your payment until we close. And then you're still going to skip that one payment because we're going to collect the interest and then you're going to pay that back at the end of the loan.
And truly what happens a good majority of the time is someone says, well, I can skip 2 months. But what happens is when they come to closing, most of the time that borrower says, what do you mean I owe that much? Or why is my new loan amount so much higher? Because that payoff demand became a lot higher than anticipated because you didn't make that payment. So you've got all the extra fee plus the interest plus everything else. It's all going to get paid.
Yeah.
Just whether or not you wrote it out of your checking account or you pay it into the loan.
Right. Exactly. So prepaid interest, that's one of the items that there is, that's not considered a closing cost. It's not a one-time fee. It's a recurring cost. It is something that we are going to show you on your closing statement. We're going to show you those recurring costs, but they're your costs as a homeowner owning the property and is going to continue day by day to collect and to be owed, just like your property taxes and just like your insurance. So if you like to have your taxes and insurance included in your monthly payment, we have to collect enough money from you up front to make sure that we have enough money in your impound escrow account that when the first bill is due for your taxes, we have enough money in that account to pay that bill that is due. So the bills are due in March and November. That is when they are paid. They're actually, you get your bill in February, it's due in March. You get your bill in October, it is due in November. So let's say that you're doing a purchase or a refinance, either one. It works the same way. Let's say that you are going to close on that loan in June. You're going to skip July. We just determined that. You're going to make your first payment in August. Well, now you've got a payment that you're going to make August and September and October, but you have a payment due in November. So there are only 3 months of payments that are going to be made, but you have a 6-month tax bill that is going to be due. And we're not going to let that account literally break even and get down to zero. So we need to make sure that we're collecting at least 2 months for a padding to keep in your account, because every single year, our favorite guy, the tax assessor, reassesses our property taxes and the property tax bill will go up slightly. So we need to make sure we've got a little bit of cushion in there, which is typically a 2-month cushion. So if we were closing a loan in June, we are going to collect about 5 months of your property taxes. So if your property taxes are $400 a month, that's about what they work out to, and we're going to collect 5 months. That's $2,000 that we have to collect from you. That is a recurring cost. That is not a closing cost. That is not a one-time fee to do the transaction. Now, keep in mind, if you're a purchase, you don't have another impound account or escrow account established somewhere else. This is brand new, so that is going to be part of the money, the cash that you are going to need to close the transaction. But if you are a refinance and you currently have your loan impounded or escrowed, and you are doing it again, when we pay off your current lender, you will have a balance in your impound escrow account with that current lender. You are going to get a refund of any money that is left or remaining in that account. But we have to collect it up front. You're not going to get that money until we pay them off. Well, you can't pay them off without us funding the loan, so we've got to collect it up front. So those are going to be the things that are going to be on your estimate that can change how much money, what is the new loan balance going to be? How much is this going to cost me to close this loan? But just remember that these are recurring costs. These are not the actual costs to close the loan. These are your recurring taxes and insurance. Do you have to impound your mortgage? Not always. If you have less than 10% equity in the property, yes, you do. There is no lender that is going to chance that you will not pay your insurance or pay your taxes when you have less than 10% equity. So if you are buying a house and you are putting less than 10% down payment, or if you are refinancing the property with less than 10% equity, you are going to be made to impound your loan. If you have 10% or more in equity, or you are doing more than 10% down payment, you are not required to impound. So if you want to make those tax bill payments when they're due every 6 months and that insurance payment when it's due once a year, you are more than welcome to do that. It does not have to go into the loan. It does not have to be charged, but we do have to make sure that your current tax bill has been paid, that there isn't a tax bill that is currently due. And we have to make sure that your insurance policy has at least 12 months remaining on the policy. So if you've got 6 months remaining, we're going to make you pay through closing another 6 months to make sure that you have a 12-month policy at the time of funding. So, those are things that are just options and part of closing costs that people don't understand. We get the questions quite often. Well, you said it was going to be this, but now it's this. And it's just because people don't understand. So I thought that it was kind of important as we're talking about points that go on top of normal cost, they go on top of recurring cost, and then you have points to buy down the rate. And my goodness, when I saw 5 points, I about fell over, just about fell over out of my chair. But I've been seeing that a lot lately. I've been seeing 2 points, 2.5 points, 3 points. I mean, it's almost been common that I'm seeing this over and over and over and over again from these different lenders. And so it's just something that I want to try to bring to everybody's attention. It's like the new bait and switch that's happening in lending. It's the new loan officer bait and switch. And it's terrible. I don't want to get somebody excited for a loan. I want to quote them the rate out the door. I want them to apply and I want them to work with me. I do not want them to apply for the loan. I've pulled their credit report. They have a credit inquiry on there. And now I'm sending them a loan estimate and it's, 3 points to get this interest rate that I charge them. I just don't work that way, but I'm telling you, you guys have to keep an eye out on that, eye out for that. It's happening and it's something that it just doesn't benefit you. It's very, very, very minimally times, large amounts of points like that do not end up cash flowing. They just don't.
You mentioned it, and I just happened to be talking to a friend of mine, and I didn't say, right, because I know exactly what happened to them. It's too late, doesn't matter. And they said, yeah, I got 2.99% financing on my house. Well, unfortunately, I know exactly the position they're in, all their stuff, and I know that they could not have gotten that without possibly upwards of the 5 points.
Right.
And I know it doesn't benefit them, but someone convinced them that we can do this for you.
Oh, no. All right. We've got a hand in the air. Oh, that's okay. That's all right. So anyway, Manny's holding his hand up. He's like, you're not recording that. Guess what? I am. Oh, I'm not. Oh, well, Matt can fix it. Matt can fix everything.
After I'm done breaking it.
That's right. I was like, I did it this time. I hit start. I plugged the wrong cord in.
Oh, no.
It's all right. That's what happens. That's what happens when we go live. What do you got? We're live. There's nothing we can do. We'll fix it later.
I got a cat chase going on at my house.
We do. I'm seeing your naked cats run around your back and jump on, and your picture keeps moving because they're knocking your computer.
Right. They're turning my chair. They're like,
I absolutely love it. All right. So what do you guys do? If you guys are loving the information that we're giving you, we really want you guys to subscribe to our channel right here on YouTube. Hit that notification button at the top so that you know when we go live. We're always live every Wednesday at 5 o'clock. If you want to watch us on Facebook, that's great too. Just follow the page. It's always Mortgage Mom Radio. And obviously, we are streaming on Twitch. We have no idea. We don't think anybody's watching us there, but we're going to keep doing it because why not? Why not? You guys want to get an appointment with us? You want to ask us questions? Please feel free to do so. Give us a call. It's 844-935-3634. Heidi and I are here to help you. I get the question all of the time. Is this Debbie? Is this the person that I hear? I say, yes, this is me. So, 95% of the time, I am the person that takes the call that talks to the person, talks to that initial consult. 95% of the time. Obviously, I've only got so much in my body that there's just sometimes just too many that I can't get there. And so that's why we've got Carrie and that's why we've got Larry and we've got Cindy and they're fantastic and they can absolutely help just as much as I can. But it is typically me that you're going to hear. It is typically me that you are going to work with. Heidi is obviously my amazing assistant and she, picks up, I structure it, I get it together, I get you moving forward, I get you going. And then she picks up up and she gets, that file through the finish line. And so, but what you see is what you get. So if you guys are watching us right now and you give us a call and you want to get on the calendar, you want to talk about your loan, you want to talk about getting pre-approved, you want to go through those closing costs, please send us those estimates. We'd love to see them from another lender. If it's a great deal, I'm telling you right now, I'm going to slap you on the little behind and I'm going to tell you to keep going. And that's a great deal. Go get it. We are truly honest that way. I have clients ask all the time. I was told that this is the interest rate that I can get. And I tell them every time, call. It does not hurt to call. Get an estimate. Look it over. You want me to look it over? Happy to do that. If it makes sense, I'm going to send you pack in because I want you to get what's best for you and your family. That's very, very important to us. I don't ever want anybody to feel like they didn't get the very best deal that they could have for, for themselves and the family. And, it's just, it's important to us, and that's why we do what we do. So, please feel free to reach out. You guys can get a hold of us in numerous ways. You can go to the website, mortgagemomradio.com. You guys can listen to the podcast. You can send me an email. You can call the office. You guys can download that handy-dandy calculator. It's awesome. Get the phone app, truly. Text the word MOM to 36260. That's 36260. Get that phone app. You guys can do your affordability calculator. You can run your payments. You can select FHA, USDA, conventional, or VA. So it's going to add all of those upfront financed mortgage insurance fees, those upfront financed VA funding fees. It's going to calculate the mortgage insurance if you're conventional with less than 20% down. It's going to ask you for that credit score so it can actually pull a mortgage insurance quote right there while it's calculating that payment for you. It truly is an awesome thing to have, especially if you're trying to consider whether or not you should or should not refinance. The calculator is structured to a refi or a purchase, so you select which one that you're doing. It's really great. You guys can email us from the phone app, watch the YouTube from the phone app, listen to the podcast from the phone app. You guys can call us from the phone app. You can do pretty much anything from there. So just reach out. Let us help you. That's what we're here for. That's what we want to do. Today was all about closing costs. If you guys want to know more, feel free to call us. We're happy to take you through it. Every week we try to pick a different topic, a different scenario to talk about and discuss. And we just want to make sure that we're getting that education to you. And if you didn't feel like you got enough, call us, make an appointment, talk to us, and let us take you through it. So do you have anything you want to say, Heidi? We're at the end of our show.
Anyone want to come help me pack? Let me know. Give me a call. Just kidding.
Yeah, if anybody wants to take care of her naked cats, she might need you for a couple of days. I think Matt wouldn't mind adding a couple more at home.
Yeah, I was just gonna say I can cat sit.
There you go. Perfect.
Yep. He's already got 4, so why not add 3 more? I don't know. That's a 7-cat house. Woo! Anyway,
4.
Yeah.
Remember, I have 4.
Oh, I thought you had 3.
No.
What is wrong with you cat people? And 4.
I have 2 nakeds and 2 fur babies.
Oh my goodness. Anyway, hey, you know what? I love cats. I truly do. I am just so allergic that they kill me. That's the only problem. I can't even tell you. My dad could say I've probably rescued 2 or 3 cats since I was little that ended up with him. I love them, but I am just so allergic. So allergic.
Yeah, you're definitely allergic. So you, Mom, me and Matt will take care of all the crazy cats. But no, I say everyone be safe, enjoy, and have a great week.
That's right. You guys have a fantastic week. We'll be back next Wednesday, live at 5, YouTube, Facebook, or listen to us right here Saturday morning on Go Country 105. Talk to you guys later.
Bye.
Bye-bye.